Hello. Alright, this is gonna be the July 3rd, 2024 daily that live stream. Let me get my chat working here. Alright, so we have equities open in about a minute here. I started live stream a little bit late, but here I am. Alright, so yesterday we noticed how on both ES and NQ, notice how we had this really big expansive move up here. I was anticipating for us to take out previous day high coming into today. So we took out previous day high on London during London session on NQ and ES. So we took out both previous day high. However, here's my outlook. And so I was anticipating for us to take out previous day high and previous week's high on NQ. And this was stated at 5:48 p.m. here. On NQ, we anticipated for prices to take up on Monday. So for tomorrow's price action, which is July 3rd, I would like to see us take out previous week's high and today's high. And it appears like we will take out previous day high / previous week's high during the Asia or possibly the London session. If we do take out previous day high and previous week's high, then consider only trading lower time frame models. And look what we did. We take out previous day high and previous week's high during London session. And so after taking out previous week's high and previous day high, you want to see how the prices reacts from there. Do we retrace back inside this range with displacement, or do we just continue higher? So we retrace back inside this range here, and it's not a very strong move down, not a lot of fair value gaps to show displacement. So that makes me a little bit wary. Hey, like this isn't as bearish, and we probably are only gonna retrace into like some sort of FPG. And here on NQ or on ES, we took out previous day high. However, we left previous week's high intact, and here we are having some sort of SMT right here between this candles low right here. So we took up Asia's highs or Asia's lows on NQ. However, on ES we didn't. So at the 10 o'clock open, we will see how I would like to see how we close on the 10 o'clock candle, because that would tell us a lot about whether we are going to continue up higher to attack London highs possibly on ES, or will we attack previous week's highs on ES. So on ES, I did have the I did have in mind that we were probably going to take out previous week's low, which we did, but intraday week, now that we're inside this week and seeing more structure, I would like to see us take out previous week's high as well. So that means we're going to take out both this weekly low and this weekly high, and possibly even previous month's high. My anticipation was for ES, for the open, I thought we were gonna go, take out previous week's low, kind of probably retrace back inside some sort of FEG here, and then retrace into this weekly FEG, and then continue high from there. But notice how we only took out previous week's low, and then we took out Monday's lows once again, and then we expanded higher during Tuesday. So Tuesday could have made the low of the week, and on NQ we didn't take out Monday's low. However, ES did, so that is an SMT. We also had SMTs at this FEG. NQ retraced back inside its FEG while ES didn't, which is something to keep in mind. So we do have SMTs here, and it appears we might have another SMT at the Asia's lows, because like I said before, IQ took previous week's Asia's lows while ES didn't. So ES seems to be the stronger one here. So just keep in mind that ES is the stronger pair. Let's see what the RTH gap looked like. So we filled it in just now, and let's see how we react from there. This is why I like to wait till the 10 o'clock open. Just morning, equities open does tend to be a little bit volatile, and it's just prices are very sporadic. It moves in very awkward ways during the first 5-10 minutes. So, and I prefer waiting on the candle closures too. So based on this 4-hour candle, we can see how prices would react, or what prices are gonna do. To protect your soul. Just continue to be patient, practice patience, and wait till the 10 o'clock open for any entries here. I really It's just that S&T is very noticeable to me. Us retracing back into here while ES didn't. Next week we can anticipate some sort of expansion candle during the first, well, just during the first half of the week, and then intra-week we'll see more structure. But just based, if we close this weekly candle right now, I can anticipate higher prices. And it looks like we will create a daily fair value gap here. Probably Alright, so like I stated in that Discord message, after a really large expansion day, the next day tends to be a little bit consolidative, or like it's either we will have another continuation if we retrace into like some sort of 4-hour FEG, if we retrace back inside a 4-hour FEG. But here we did retrace into this FEG here, but I believe this is the more significant one, this larger 4-hour FEG. But like I said, today you can have a consolidation model, because I do anticipate for us to create this daily FEG here. I don't know how big that daily FEG will be, but I am anticipating some sort of daily FEG. So that can set us up for the next week. Because if we have a daily FEG, then we should use it as, you know, a sort of trampoline for prices to continue, you know, retrace into, take out previous week's high or previous week's high, this week's high, and even possibly previous month's high. But yeah, like I said, I probably will be waiting for the 10 o'clock open again, to see where we are, because yeah, it's very back and forth, like interesting price action. So on the 30-minute, it looks like we are disrespecting this 30-minute FEG here. We had this 30-minute market structure shift. We use this FEG, we retraced into this FEG, and we went lower. After we take that swing high, this does indicate that we will probably most likely seek higher prices, and London highs are a target for me right now if we close on this, depending on how we close on this 4-hour candle. So if we do create a 15-minute FEG here on ES, we could use that 15-minute FEG to, you know, long, and probably most likely take out London session highs. But it depends on if we create this FEG or not. So just looking at the 4-hour right now, if we close on this 4-hour right now, what are we anticipating for us to run this 4-hour high or this 4-hour low? Just looking based off of that, we can anticipate for us to take out this 4-hour high. But you want to go into the lower time frames to, you know, actually have supporting ideas for that, for us taking out 4-hour high. So here's the next 15-minute candle. So I do want to see us create, you know, some sort of FEG. So prices, you know, could retrace into and take out London highs. Depending on how you can use standard deviations to see how far you can go, but we do have previous week's high in target, and that's the next buy side level that I do have in mind. So let's see if we have any standard deviations that really stick out to me here. So we do have this standard deviation. Yeah. Yeah. So we have this one. It's basically from this candle's high to this candle's low, or yeah, but instead of using the wicks, I'm using the bodies. And this negative 0.5 aligns with basically London highs, so I probably will use that as my standard deviation, just to see how high we could go. So we can anticipate, you know, -1 getting hit, negative 1.5. So, you know, we could take a partial here and a partial here. But yeah, depending on how we close here, we'll see. If we take out London highs on ES before we open the next 10-hour or that next 4-hour candle, then I would like to trade NQ's model, because we still have London highs intact. So let's mark out London highs here. So like I said before, if London highs is taken before the 10 o'clock open, then I would like to trade NQ's model. But if London highs is still intact on ES, then I'll trade the ES model. There's London highs on ES. Bye, Ma. Why did I say? Oh, whoops. London high session. London high. Okay. So London session highs just got taken now. So what did I say before? If we have a bullish closure on the 4-hour candle, if we still continue to hold this bullish structure here on NQ, then I'll take the trade on NQ. Rather, yes. So on NQ, we didn't take out London highs yet, so that London highs could still be a draw. We had this market structure shift again on NQ. So here, this is the market structure shift. Notice how we retrace into this 30-minute FEG and we just continued lower, taking out Asia's and London lows. After we, break that, take this high, we can anticipate for higher prices. Oh shoot, okay, I was just told that we closed early today. Where does that even say that? Well, I guess, if we do close early today, then today's price action probably is going to be a little bit wonky. It looks like we won't retrace back inside this 15-minute FEG, just as of right now. But we'll see. Just know that we had SMTs at these lows. We have this 4-hour bullish candle closure. So even on the 8-hour as well, 8-hour we can anticipate for us to take out the high. But on the 4-hour, the draw liquidity is like we can anticipate for us to take out that 4-hour high right here. But it depends on if prices will give us an entry for that. Even if we take this trade purely off of the 15-minute, I just can't see it happening. So London highs, yeah, I just don't see us retracing back inside this 15-minute FEG. Go go watch my FAG theory, but there is a reason why I don't anticipate for us to retrace back inside here. This gap, if we close right now in this 15-minute time frame, this gap is going to act as a breakaway gap, and we're most likely going to take out London highs before retracing. And you know, so we just got to be nimble. Let's see us create this 5-minute FEG though, or whatever time. Yeah, 5-minute FEG. What interesting. Yeah, here. Like I said before, I do want to see us create a 5-minute FEG. If we don't create a 5-minute FEG, then I will probably most likely not have an entry to target London highs and 4-hour highs. Unless we have, you know, some sort of closure that will tell us that we will most likely retrace into this 15-minute fair value gap, then take out London highs. But if we close in this 15-minute candle right now and we have some sort of, you know, FEG on the lower time frames, I'm not anticipating for us to retrace back into here. I'm anticipating something like this to happen and treat this fair value gap as a breakaway gap. No chatters. No one to chat with. It's okay. My day will come. We might have, you know, some sort of FEG on the lower time frames, sub 5, even below the 5, but it doesn't look like we do. I don't want to trade based off just the CRT. I need to have some sort of, you know, PD array that supports the idea of us going higher on the lower time frames. And London highs are in for a ride now. This swing high, low is a swing high. But if you take the bodies of the candle, will anything align? -2 kind of like interesting. So this one is a good so we can anticipate -1, negative 1.5 here. Did we just wick above London highs? It appears we have. Okay, so we took out London highs just now. So I don't have an objective. We do still have this 4-hour high that we could take out if we close right now. It's just we're most likely, if we do get a retracement inside this 15-minute FEG, I'm gonna wait and see if we respect it or not. And what that means is if we can get some sort of like retrace into this 15-minute FEG and have some sort of lower time frame confluence, and then I'll take the lower time frame power 3 model and then target the 4-hour high in that 15-minute high. If I base my trade off of that 15-minute power of 3. See what ES is? So just in context with just, if you can just read this 4-hour candle here, we came back inside of 4-hour FEG. We had SMTs at this low, and we have this, you know, this gnarly looking bullish candle on ES. You can anticipate for the next candle to take out, to be in like an open, low, high, and a close candle, just based on this candle's narrative and its story. So it's coming off of a 4-hour FEG. It had SMTs at this low. It's just what PDA array is going to help us take out that 4-hour high. Are we just going to instantly take out the high? And then, you know, so we have 2 minutes left with news, and we just shot up, taking out 4-hour highs. Alright, so that was the unemployment claims. We didn't get any sort of retracement inside. My charts were glitching for a second there. So that news did ended up taking out news did end up taking out that 4-hour high. So we can see how we trade here now. I do have a member in my group that trades right at the 10 o'clock open, so I do want to see if he was able to catch that move. But the volatility that just got injected in there was kind of crazy. At 10, it just like a man on Viagra. That was one gnarly 1 minute candle right there. I'm gonna mark out that 1 minute open. Or I'm sorry, I said 1 minute open. 10 o'clock open. It's so volatile. Holy moly. Wait a minute. So we came into that 15-minute FEG, and I want to see if we can continue to hold it. If you have some sort of displacement on the lower time frames, that supports the idea. But my second trade was aiming for retracement at 9. Was aiming towards 9. It's 11 hours. What is this space off of? Is this the 1 minute? So the enter off the 1 minute right here. F45. What time do we retrace into this 1 minute FEG? Did we have a 2 minute FEG? Oh, we did, okay. Yeah. The 45-minute candle here. 3 minute? Nah. Yeah. Anyways. Powerful candle. That was a powerful candle. Yeah, see, so he did end up taking that. Just based on those candles. Wait, what did he? Wow, where did he enter? He probably entered right at that open, or probably like 9:59, a couple seconds before. So both ES and NQ are, retraced into that 15-minute FEG, but can we create some sort of FEG away on the lower time frames? I don't know, it looks like we probably won't have some sort of FEG that supports that. Supports us going higher. Okay. Wait. I don't even know what to say. Just be careful next time. I have to understand that there's on the live stream you're gonna get models play out every single day, every single week, set every single month. There's times when prices are going to be a little bit, you know, not favorable, and it's if you want to say this is the week where prices are not favorable, this is the week. We have a bank holiday in during the middle of the week. It's end of P week, the first month of the week, and it's a day after such a large expansion day. So like, if you can just tape read here, this would be, you know, very valuable to you in your learning. If you can just tape read. Like I stated before, I already stated this one, I'll say it again. After we take out, so I anticipated for us to take out previous day and previous week's high. I didn't have, you know, an entry to get into here. I was asleep during London session, and after noticing, you know, this 4-hour candle closure, and we took out, you know, seeing how London highs could be a draw, there's no entry pattern for me to target that draw. But, you know, is my I don't want to say expectation, but is my objective still right? Reading prices? Yeah, it's just we don't have an entry. On the lower time frames, I just can't find any entries for me that I would have taken. Even like most people would have taken this entry at this 1 minute FEG and target London highs. But when did this setup occur? It occurred at 9:35, which is 5 minutes after market open. It's still, you know, markets are still fresh, and this is just enticing you to, you know, enter that trade. You know, how many times will this trade play out? And just, you know, based on my understanding, it's too early for me. I like giving it a little bit more time for candles to fully close. And like I said, one of my rules states that I'm not allowed to trade during the first 30 minutes. And I mean, seeing this trade run away from me, completely cool. It's just, does it fit my rule set? Does it fit my entry pattern? If there's no entry pattern for me to enter, even though I do know what the objective is, then that shouldn't, it shouldn't hurt you. It should low-key motivate you that, you're understanding where prices are going. It's just you have a rule set that dictates whether you enter or not, and it prevents you from, losing trades. And yeah. But yeah, I mean, we have basically caught out all the objectives for prices now. I am anticipating some sort of consolidation date. It's very wonky because, I mean, ES took out previous week's, or I'm sorry, NQ took out previous week's high while ES didn't. But ES took out ES took out previous week's low while however NQ didn't. So it's just, interesting, very interesting time right now. Yeah, but most likely we'll continue just watch. I feel like on ES right now we are probably generating liquidity. We are most likely going to generate liquidity. Because I've, this 8-hour FEG is left into, not even tapped into, and this 4-hour FEG is that, this one appears to be the bigger one out between this one and this one. But like I said, if we're a bit bullish, we should respect this one and not have to come into this one, in which we did. Yeah. So tomorrow, no trading tomorrow, so Interesting. Depending on what we do here on NQ now, if we can create this daily FEG, but depending on how we close today, Friday's action, we might just take out previous month's high without retracing into that. So if we close like this on the daily right now, we will most likely take out previous month's high rather this playing out. So there's two scenarios. We could retrace into the FEG, and if we respect it, we go higher. Or we can just not even retrace into the FEG and just continue high from there. Money is money. That's what I was gonna say. Hey, look, we read each other's mind, bro. So there's that new 15-minute candle here. No FEGs to base my trade off of here. There's this 1 minute FEG. There's this one right here. It's below 4 hour open. And it's on the 1 minute though. We have this 15-minute high. If I take two cons, let's see. Okay, let's see if I can type my things fast enough. So that'll be a $700 risk. Do you have SMTs at these lows? So this would be the entry right here to target this 15-minute high, and we do have standard deviations at that -1, so I'll probably target that -1 if we do, if I can get a retrace inside here. But it's just interesting to me because if we create this 2-minute FEG, we shouldn't retrace into this 1 minute. It's a 101. Like, take this, it'll be 7. But it's not. I would be buying. I would be buying above the 10 o'clock open. Where do we open? So I'll technically be buying below the 10:15 open. And targeting that 15-minute high. Okay, let's just tape read. Okay, I would have entered there. So if prices can give me that entry, have stop loss there. My stop loss will probably be at this open of this 1 minute candle at 10:13. So it's just tape read. This is a FOS, not FOS, but this is a tape reading trade example to see if we would have taken that or not. See what I do have in schedule here. Reviews. Okay, so after this trade pans out, I will talk about the 2 trades that occurred yesterday, in which I did not take because I'm a little bitch. I'm just kidding, but because I had entries. I was using I believe it was a 4-minute FEG and not a 3-minute FEG, and prices tapped into the 3-minute FEG and not the 4, and yeah. This 130 trade, where is it? Oh yeah, it was this. It was this one of. It was this one. To take out this, I believe it was this one, right? Just look how what this 50. Yep, it was this one. Very quick scout, however. So 150. So it would be 1.1, 101. That one. Oh, let me leave that on actually, so we can refer back to it. Okay, and then this next one was at a 3-minute FEG too. And then there was this one that occurred on London session, or not London session, but pre-market, and which is really, this was a really nice setup actually. This is one of the longer trades that I would have held for. So let's see if this one plans out. So the reason I'm not taking this is because I don't like how we're buying above 10 o'clock open, but just based on this structure here, prices start tapping to a 2-minute FEG, and this 2-minute FEG should be respected to go higher. So prices just dipped into that 10 o'clock open, and objective is just to take out that 15-minute high. Bum ba bum 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 bum. Dun 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 dun. Dun 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 dun. Dun 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 dun. Dun 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 dun. Who else is live streaming? There's Tanya. That's it. So this is just like I said before. This is just a tape reading example. I am just this is not a real execution. I would have had like actual positions on here if this was real, but it's not. See, so after we take out that swing high, market structure shift and London session is basically the draw of liquidity. Let me see what on the lower time frames here. There's that market structure shift at 9:30, and then it's just 9:30 tends to be like this. This is usually the price action for 9:30, kind of like that. Very interesting. There it is. Market share shift 1 minute FVG, but not my model. And then there's this model that that tape reading, and let's see. What will we do here? We just tag into that 1 minute FVG. It's a 1 minute FVG though, so that closure below that 2 minute FVG is not bullish at all. That's not bullish price action. That's almost bearish. That just means that we will go seek lower. I don't know how much lower, but we will seek lower. We do. Let me just. This is not a real trade. It's tape reading. Example. Just for clarification. Just for clarification. So after this trade is over, I do want to go over to the previous day and go over the trades that I do have in mind, or not in mind, but I do have so my example trade, I would have gotten stopped out. Not example trade. Alright, so going into what happened yesterday. So first thing on the London session is this was a beautiful trade. Beautiful trade. Okay, so notice how we had this large S&T. ES took out this low. However, look at where NQ is. Nowhere near it. So this larger time frame S&T already is just like screaming. Like this, there is some manipulation in the markets right now. On the 8-hour time frame, we retraced back inside this 8-hour FEG once again. So this retracement back inside this FEG with the S&T, and notice how this 30-minute candle closed. So we came into an 8-hour FEG here. I had this S&T. Notice how this 30-minute candle closed. What are we anticipating for us to do? Take out this candle's high or this candle's low? You know, just looking purely based off of that, we can anticipate for us to take out this candle's high, right? So you want to go into the lower time frames to formulate a plan. So on the 5-minute time frame, we have this 5-minute FEG. 5-minute FEG that supports the idea of us taking out that 5-minute high. So whenever we close at 8:08 here, or 8:08, my bad, 8 o'clock. Whenever we open at 8 o'clock, we dipped back inside this 5-minute FEG on the 1 minute. Let's go into the 1-minute time frame. So we had a 5-minute FEG that supports the idea of us taking out that 30-minute high. So on the 1-minute time frame, we opened up at 8. We don't take out this high yet. We retrace into this 5-minute FEG, and then we continue to take out 30-minute high. There's a 15-minute FEG, I believe, that needed to be rebalanced here. So this is also this 30-minute high. Also, once we take this 30-minute high, this is that higher time frame market structure shift. Notice how when prices retraced into this fair value gap here, we continued lower. After we take out this swing high that retraced into a fair value gap, this is again like an algorithmic pattern. This is indicating, hey, we are going to seek higher prices, and so after we take out that 30-minute high, stops are moved to break even. So the trade is now just, it's a winning trade. It's let the runners run. So you can have standard deviations to take partials at. So we could take partial basically at this -1. -1 being probably looks like the consequent encroachment of this 15-minute FEG, and then -1.5, and then 2, or a full rebalance of this 15-minute fair value gap. So that was the first trade that I did notice and this occurred during like pre-market, which I wasn't here for, but it's just one of those trades where I just look back and it's like, wow, that's beautiful. But the next one I do want to talk about was this one, this 5-minute. So if you want to go back to it, let's see what happens here. Just looking purely based off of this 15-minute candle here, this 15-minute candle, are we anticipating for us to take out this 15-minute candle's low or high? We also are respecting this, I believe this is a 15-minute FEG. That price is retapped back inside and then continued higher. So we are coming off of a PDR rate. Yeah, so we are coming off of a 15-minute FEG, and the 4-hour high was my my 4-hour objective. So whenever we took out this 4-hour high, I only wanted to trade lower time frame models. So looking at this 15-minute power of 3, are we going to take out this swing high or low? My just purely looking out for this, I'm just eyeballing it, probably going to take out this high. You don't want to take your trades purely based off of that. You want to have a reason why that high should be taken as well. Do we have FEGs on the lower time frames that support the idea of us taking out that 15-minute high? We do. We have a 5-hour FEG. So a 5-minute FEG. So prices dips back inside this 5-minute FEG at 11 o'clock. So at 11 o'clock, we dip into this 5-minute FEG. We take out this 15-minute high. And this 15-minute high aligns with, so this 15-minute high is also a 30-minute high and a 1-hour high. That's time frame alignment. So this hourly objective is to take out this swing high. This 15-minute objective is to take out the swing high. And you can't see it, but this 30-minute as well. The 30-minute objective is also to take out that swing high. So once we take out that 15-minute, 30-minute, and 1-hour swing high, your trades should be moved to break even. There should be no reason for you to occur any risk anymore. So break even is moved. So once prices comes back to break even, you're stopped out. There's no need for you to you already took your partial. It's a winning trade. The next trade I do want to talk about was, oh yeah, and the reason why I didn't take this trade is because I believe I was using a 4-minute FEG, or was it 3? I can't seem to, I don't know why I didn't take this trade actually. Oh, I remember why. I wanted prices to retrace into this 1-minute FEG, 1-minute hour order block. This down close candle right here, this series of down close candles, I wanted prices to retrace into this 1-minute FE, 1-minute OB to continue higher. But like I said, it helps my risk. It doesn't make it too wide. But yeah, prices never retrace into this 1-minute OB, and prices just retrace into that 5-minute FEG. One thing I could take away from this is I've what's it called? ICTF has stated before that FEGs take precedent over order blocks, so that is something to keep in mind for the next time. So yeah, I'm gonna leave this OB on there just so I can remind myself that the reason I didn't take this trade is because I had my entries a little bit lower than where prices retraced into. So after that first missed trade of the day, the second missed trade was up here. Okay. Same old. We have 15-minute power of 3, 1 hour power of 3, and 30-minute power of 3, and even 4-hour power of 3. So this is all, we all have the same objective on the 4-hour, 1 hour, and 15-minute power of 3. There is, we all have the same objective, which is taking that swing high right here. There is a 4-minute fair value gap that supports the idea. There's a 3-minute that supports the idea. There's a 2-minute, and there's, well, 1 minute down here, but I based my trade off of this 4-minute, this 4-minute. So my entry would have been when prices retraced into this FEG here, which we didn't retrace into, which is kind of unfortunate because we retraced into this 3-minute FEG and we took out the 15-minute and 1 hour swing high. I don't know what I could have done better this trade. I mean, I just based it off of a 4-minute, but looking back on it now, it's just something to do with math. 4 isn't a multiplier of 15, if that makes sense. You can't multiply anything with 4 that can get you 15 without it being an awkward number. So 3, I feel like I'm just coping here, but I don't even know if this even makes sense. But 3 is 3. You can multiply 5 to get 15. 4, you can't multiply anything to get 15. You can't multiply 4 times 4 to get 15. You can't multiply 4 times 3 to get 15. It's gonna be an awkward number, and I'll show you guys. 15 divided by 4. You're gonna have to get something like 3.7. Like, it's not. It's just an awkward number. If next time, whenever I do have the chance, this is what we. If I can take my trade off of a 3-minute FEG or a 4-minute FEG to target a 15-minute swing high, I'm going to choose the 3-minute FEG. I'm going to base my trade off of the 3-minute FEG next time, not the 4-minute, because fuck the 4-minute. But yeah, that is basically my 2 trades that I missed on July 2nd, 2024. Just something to look over, Yeah, not too bad. All these this 15-minute trade right here was more of a swing trade. It's a longer time frame trade, not a scalp. It ended up playing out because we're targeting this 4-hour high, and when prices retrace into this 15-minute FEG, it takes out that 4-hour high. Just not part of my trade model, but yeah, it's I could have, like I said, second trade, third trade. The second trade that I was planning to take, next time I'll base my trade from the 3-minute FEG if I'm targeting a 15-minute swing high. On this trade, 15 or fair value gaps take precedent over a fair value gaps take precedent over order blocks. Those are the things I learned from yesterday, and yeah. So back into the analysis for currently, we are just consolidating after, I mean, if you look at it right here, you can just tell we're just moving back and forth. Not favorable conditions at all. There is this trick that I'm looking at right now, that I'm just formulating in my head. I do want to see us close above this 5-minute FEG, and just based on this 15-minute candle right now, it appears if we close on this 15-minute candle right now, we can anticipate for us to take it out this high, but there needs to be supporting fair value gaps on the lower time frames that support the idea. And I do want to see if we can create a 5-minute FEG, because if there is, I will take it, but if there's not, then I wouldn't take it. And notice how I would have been buying below the 10 o'clock open price. No FEGs. There's one right here, this 2-minute. This 2-minute FEGs. Just to target that 15-minute swing high. Once this candle closes, where would my stop loss be? Here. Should I stop? Put it at the basically the order box consequent or mean threshold? That is up to me. Let's see here. Consolidative markets. Okay, so things just came up. I do have to leave soon. I have I have to be at a basketball game. Not a basketball game, but I'm gonna have to be playing basketball later, so probably gonna call it off for the stream today. I mean, it was kind of a short stream, to be honest. But yeah, hopefully you guys got some knowledge from that. Who knows? I don't know. I mean, I'm just talking to myself. So, yeah, with that, I'm gonna end it off for July 3rd, 2024 live stream.